You'd better have a feel for commodity cycles, timing, and how money is flowing into the mining sector if you're running a streaming and royalty business. Wheaton Precious Metals announced its Q2 yesterday. CEO is Randy Smallwood. Randy, welcome back to Kitco.
Always a pleasure, Michael. Good to see you.
Randy, can you highlight Wheaton's Q2?
Record. It's record dividend being paid, record cash flows, record, everything is just looking really strong. I mean, we're actually just a little bit off of record production on a gold equivalent basis. But with some of the stuff we have coming on stream over the next few quarters, that should fall shortly too. So everything is just running really well. We had a little bit less gold than expected, but it was more than made up with a bit more silver from both Peñasquito and Antamina. And so, and then lots of opportunities out there. Announced a new stream, and we're very busy on that front, and hopefully to maybe announce a few more here in the next couple of months.
Can you get into that a bit more, just regarding the records? I mean, we've been coming off some quite strong commodity prices, but was there also kind of some production lifts on that?
Well, and I think the nicest, we've had some challenges down at Salobo, which is our biggest gold producer. They're revamping their maintenance system down there to improve safety performance, and so it's something that we fully support Vale in terms of going through that. But it's taken them a while to get back up to speed. We're still seeing some impacts here in the third quarter, but it looks like by the end of the third quarter we should be getting back to a pretty normal run rate. And so having a bit less production out of there. Both Peñasquito, Newmont's doing great things at the Peñasquito operation, and of course Antamina, which is always such a world-class top-level mine, and it's also delivering even a bit better than expected. Having them step up, I think it just really sort of reinforces the benefits of having a diversified portfolio that gives us good broad exposure, and so I think it's just set us up really well.
Let's talk about that Latin America exposure. There is concerns, there is rumblings just regarding increased taxation, also resource nationalization. What are you hearing from the people operating in the area?
Well, I'm hearing it around the world, all the way from the G7 calling for higher taxation rates worldwide to countries. It's, if anything, I take this and take it as reinforcement for my positive sentiment towards precious metal prices, because it's just a reflection of the fact that governments around the world are scrambling to try and not even trying to balance the books. They're just trying to make the books a little bit less negative. Most of them have given up on trying to actually balance the books. And so it just, again, it just reinforces why we're in this business and why I'm such a strong believer in precious metals. But taxation pressure is something that we're gonna see continued. It usually comes with higher prices and higher profits around the board. So it's kind of it's a necessary cost of the success that we're having in this industry right now.
What's the outlook for precious metals?
I'm very bullish. There's no doubt we're coming off a bit of a pandemic bump in terms of precious metal prices. We did see record highs in gold and some pretty high silver prices last year, right at the start of the pandemic, as people were concerned about, trying to understand how we as a society were going to manage this pandemic and the risks associated to it. So we have seen it come off of those highs, but by no means has it dropped down substantially. And I think if you broaden your horizons and look at it, we are still in a very good, strong uptrend that started way back in the early 2000s, taking gold from $300 an ounce up to close to $1,800 now. And it doesn't take much to look at that and see that there's all sorts of good, strong, foundational reasons why we're going to see this continued uptrend. The fundamentals behind the U.S. dollar just aren't very sound, and so it's just going to continually apply that upward pressure towards gold prices.
You mentioned taxation pressures worldwide. There seems to be, though, a bit of a, how would you say, a premium for top-tier mining jurisdictions, whether it's going to be on ESG or just regarding regulations. And I'm just thinking about jurisdictions such as North America and Australia.
Yeah, there's no doubt. When we look at opportunities, one of the it's not the first thing that we look at, but it is one of the first things we look at is the jurisdiction. How stable is the jurisdiction? How much confidence? And anyone in the resource industry and the mining industry, all we want is firm goalposts. One of the biggest hurdles that the mining industry has is the amount of capital has to be put up in front, and then it can take sometimes years, sometimes decades to get that payback on some of these projects. And so you want to have firm guidelines, firm goals, firm frameworks in place that sort of make it clear, and so you understand what your tax burdens are as you run these projects and move them forward. And so that's really what the industry wants is whatever it is, just give us some stability so we know what we have when we're making the decisions as we invest into and reinvest into the industry.
Now, there's a ton of money that's going into battery metals right now. What types of precious metal streams might that provide if you see like a big copper, lithium, or even a nickel project gets greenlit, Randy?
Well, just about all the copper and nickel projects out there. There's not too many precious metal byproducts out of the lithium operations. None at all that I know of. But when it comes to copper and nickel, they usually come with healthy little non-core byproduct precious metals. And so we are seeing a good, strong focus on that front. We've got a lot of companies that are looking to build those base metal projects. Streaming is a very attractive source. I mean, we don't compete against the debt. And so if you're going to build a project, it usually requires a bit of debt, mostly debt, but a bit of an equity contribution. And that's where streaming is so attractive. And so, these base metal companies, these development companies, they have a choice. They can, on the equity side, either go back to their shareholders and sort of deliver further dilution, usually at a discount to net asset value as they move these things forward, or they can turn around and use a precious metal stream, sell off some of the non-core byproduct. One of the hidden benefits, probably the least understood benefits of a stream is that it always dramatically improves the internal rate of return of these projects, and that is something that shareholders are constantly demanding more and more of out of the mining industry. Is that we have to get better at delivering a return on the invested capital, and a stream always contributes a larger percentage of the capital in building than it does the percentage of revenue that it takes away from the operation. And the net effect of that, it's a very simple math, but the net effect of that is that the IRR will always improve whenever you enter into a stream. So there's just so many positives to streams as a funding mechanism to supply the equity side of any capital that's required. And I think the industry as a whole has recognized that, and that's one of the reasons why we're so busy.
Setting aside your outlook for precious metals, are we getting into an environment that's going to be favoring the royalty and streamers? I mean, I look at the GDXJ, it's down 30% for the year. I also look at Ornink, the data service that tracks investments in the junior space, and the reporting that financings are dropping. It looks like there would be more opportunities for you because it would be a place where people can go get financing.
Well, and I've said this, many times. I really do believe that our streaming model, the streaming business model, is the best way to invest into precious metals. Mainly because you don't have the same cost risks that you have in the mining industry, and you've got that you've delivered with those fixed operating costs that we deliver to our shareholders. We get the full benefit of any increase in commodity prices. That all gets delivered right back to us and our shareholders. Whereas the mining industry suffers from, with higher prices, it ultimately has an impact on the cutoff grades at the mine sites, and higher prices will drop the cutoff grade, which just means a higher cost on a per ounce basis. There's always going to be cost creep. Whenever we see higher prices, that means there will be cost creep on a per ounce basis at mine sites around the world. Every mine is unique, and so the impact is different at each operation. You have to understand, where those differences are. But there's no doubt, in a general sense, higher prices will always deliver higher costs in the mining industry. The streaming industry doesn't have that, and so we provide levered exposure without the cost risk. I really do think streaming is the best way to invest into it, and I think our track record has shown that. And the more that gets recognized, the more attractive we become as an industry.
Lastly, juniors paint a dire picture of a pipeline for the various metals that, depending upon the type of project that they're advancing. You look at it more broadly from your vantage point with your wide exposure on that. In the precious metal space, what do you see as having the biggest drop-off, silver, gold, or PGE?
We haven't seen any big gold projects or gold discoveries in a long time. It's the tier one in the world. We just haven't seen that level of exploration success on the gold side. In fact, a lot of the new success on gold has been identifying copper porphyries and that have healthy gold byproducts. And some of the largest gold production in the world comes from copper mines, and we're seeing some of that. But Michael, you've heard me say it before, and all, there's a phrase I call geological inflation. And that is, it's just getting tougher and tougher to find them, and it's getting tougher and tougher to permit them and to build them and to move forward. And so all of that just bodes well for those of us that already have good, strong portfolios of assets.
Thanks for your time, Randy.
Always a pleasure, Michael.
He's Randy Smallwood, CEO of Wheaton Precious Metals. My name is Michael McRae, and you're watching Kitco Mining.